Hey everybody, Chuck Barone. It's Thursday, November the 9th, 2023. What a difference a day makes, right? Wow, the markets were rallying, the bond market, everybody was convinced this rate hike thing was over. Wow, we're all celebrating. It looks like it's going to be roses and champagne, and the Fed's going to cut rates next year, and everything's going to be just wonderful. And oops, hold on a second. Powell comes out today, has a few words, and everything changed. Boom. Wow, what a difference. So stock market, before I get rolling on the show, let me take a half a second. Welcome everybody. Thank you guys, as always, for supporting the show, watching the videos, and being here with us every day. We appreciate you guys. We do, man. All right, so markets were having a great day today. Bond yields were falling. Bond market was rallying. The stock market was up. Everybody was looking happy. Dollar was weakening a little bit. And then Powell, speaking at the IMF today, had a few things to say about where things are in this inflation fight that were completely contrary to what the Fed's been signaling for the past couple of months and to what the market believed where we were. So everything just changed. The market tanks. The Dow ends up down 220 points. And it was up around 100 and change, right? Boom, 33,891 on the Dow. The NASDAQ down 128 points, 13,521. The S&P down 35 points, 4,347. And all of these were just huge reversals. The markets had momentum. They were going up. They had been riding a big winning streak. I think it was around 7 or 8 days in a row the markets went up. And then, boom, it all changed. Same in the bond market today. Now, the bond market was a little bit shaky to begin with because they had the Federal or the Treasury had a big auction today of 30-year notes, or 30-year bonds, I should say, that did not go well, undersubscribed. Big, I think it was, I want to say $24 billion worth of bonds. So the bond market had a little bit of pressure, was still having a relatively good day till Powell spoke. And right from then, man, bond market turned around, basically like a 20 basis point swing. Rates were coming down 8 basis points or so. End of the day, listen to this, the 10-year ends up 10 basis points, 4.63%. The 5-year up 10 basis points, 5.03%. I got to say, I've been watching this market for a long time, guys. I can't remember the last time I saw a bond market swing like that. Bonds are typically, bond market is like watching paint dry or watching grass grow. There's just, all of a sudden the bond market's a casino now. Where you got these massive volatile swings. Yay for the old people holding those bonds, man. They must really, it's like riding on a friggin' ship in a storm, man. They're rocking back up and down and all around. God, man, it's horrifying. We need some policy here to settle some of these markets down. We can't have this kind of volatility, man. It's just no good. The dollar today rallying up, man. 105.94 on the dollar index. Looks like it's about to get back above 106. Strong dollar, of course. Higher rates always mean strong dollar. With Powell's speech today, boom, dollar strengthens. Oddly enough, even with the strengthening dollar, gold and silver rally today. You have gold up $8 at $1,957.80. Silver up 7 cents, $22.59 for an ounce of silver. So in spite of the strong dollar, gold and silver go up today. That usually doesn't happen that way. I've been telling you guys, I really believe both of these, gold and silver, are poised for a breakout. Just waiting for the right moment here. I think it's going to come when this dollar gets down 102, 101 area. You're going to see gold and silver rocket. Oil today has a small bounce, up 22 cents per barrel, sitting at $75.55 for a barrel of West Texas Intermediate. I've been telling you guys for a long time that oil, it looked to me, what I was seeing, that oil wants to trade between 70 and 75. We had a huge spike up as we know, it was approaching $100 per barrel. And even then I was saying I was really skeptical about it. It was really kind of a spec thing more because of the war over there now and speculation that that war could get bigger and more people involved and could disrupt the flow of the oil. You know the players in that market don't want that flow disrupted. I don't care how many wars are going on in the Middle East, the oil's going to flow. But I still say it wants to be between 70 and 75. It's barely above $75 right now. I think we got a little more room to the downside. And Bitcoin today, continuing its rally, man. Wow, up another $1,071, sitting at $36,681. Big rally, rocking on. My friend Greg's got to be having a smile on his face. I think he's holding some Bitcoin. I know a lot of you guys who watch this show holding Bitcoin. Good for you guys, man. This is a nice rally. I think it's up for around more than $20,000 from its low, around $16,000. So that's a hell of a rally, guys. More than 100%. All right, so let's talk about the markets today, the news you guys need to hear. First thing was that we were waiting for, I thought, honestly, when I started to put the show together today, I thought this would be the big news of the day, would be the jobs report. We get that every Thursday. Coming in today, 217,000 claims for unemployment. They had expected 220,000. I guess the number's still better than the low, the 150s, 170s we've been seeing for some of these claims, these weekly claims. Still showing a pretty strong job market, although the media and the market's calling it cooling because it's not under 200,000 claims. We need about 285. And I think 285,000 claims is where the Fed would like to see this. That would show that the wage pressures from a hot job market are gone, right? So Powell speaks today. Powell gets out at the IMF. Powell speaks, markets tank, bro. Wow, what a catastrophe. Powell, St. Jerome, pours cold water all over the stock and bond markets today. After Powell sang his hawkish tune to the IMF, stocks reversed gains, took big losses for the day, as we just talked about. Bond market swung almost 20 basis points. Market was certain, and I've talked about it, my doubts over the past week or so. The market was pretty certain that this rate hike cycle was finished. They thought we were going to be moving into rate cuts next year. The market had been celebrating this for a while now. Powell today, not so fast. He told his assembled crowd that the Fed, here's the quote, would not hesitate to raise again, depending on what the data showed. He said that the Fed officials are not confident, there's the quote, that rates are high enough to finish the job on inflation. Now, I gotta say, guys, this drives me freaking crazy. For the last two FOMC meetings, right, the Fed has held rates steady. And they've been signaling pretty strongly, actually, that the cycle was over. They're talking about higher bond yields doing their work for them. They had all these, Now, only in the last couple of days did you get a couple of these knuckleheads out there talking about we might have to raise rates higher. But, they were leading this market, and not everybody believed the cycle was over, right? Well, today they decide that they need to send a different... I think the Fed got nervous watching the markets rally, and especially the bond market was coming down so dramatically. They felt like that was going to take away their leverage there, and they would have to see another hike. But it just makes me crazy because they had their chance already twice to raise rates a quarter. Would have told the markets they're serious. Would have made everybody understand where we are in this cycle. Instead, they didn't raise. They came out talking about, let's see where the data goes, body beep, body boop, bullshit, okay? And the bottom line is, the Fed, they probably did less than perfect job the past two meetings. I think they were afraid they were going to see a big recession. All the data is pointing to that not being the reality. I think they were hoping that the bond market spike in yields would do their work for them. Doesn't look like that's going to happen. They're hoping against hope that the inflation numbers would come down. I don't think that's going to happen. So instead of raising when they could have done it very easily and calmly in one of the last two meetings, it looks like it's going to come down to December. The Christmas rate hike. Oh, it's going to be wonderful. So we'll see where that goes. Of course, we're going to be on top of it. We can anticipate a whole bunch of Fed speak over the next couple of days. Finishing this week and rolling into next week. So we'll be here to bring you guys all that news. And one last thing before we go today, guys. I mentioned that there was a big auction today for Treasury bonds, 30-year bonds. I think it was $24 billion worth. Treasury debt, guys, is just going friggin' wild. What is it that, I guess like rabbits, or it's just, it's kind of like the gremlins or whatever, it's just constantly multiplying. The numbers are getting to scary stuff now. Bank of America today releases a report saying U.S. Treasury debt is on a path to disaster, showing that U.S. debt is completely unsustainable and on a horrible path right now. Listen to this. The report said that U.S. debt would surpass $50 trillion by 2033. So within 9 years or so, we're going to add another $18 billion onto the federal debt. It's just friggin' crazy, guys. What are we getting for this money, man? Okay, tax cuts, really? Military? How is any of this? It makes me crazy. Listen to these numbers, guys, okay? The Treasury is now borrowing $5.2 billion every single day. $5.2 billion every single day. That adds up to $218 million every single hour of every single day of the whole year. They're overspending by $218 million an hour. Holy crap, man. So on the other side of that coin, let me ask you guys what you think. What are the chances that our shit government we have right now has any chance of getting this under control? And if they don't get it under control, how will we ever start to pay this stuff off? If we get to $50 trillion, I guarantee you that these numbers, $5.2 billion per day and $218 million per hour, are going to be way, way, way higher by that point. Because just the cost of servicing that kind of debt's going to be sick. So okay, so now we need to pay some of this debt off. So how do we do that? What goes? They're not going to want to raise taxes on wealthy people. They're not going to want to cut the military, even though that is by far the biggest part of our budget, that money we spend at least. So what's going to go? Old people? Poor people? Foreign help? Infrastructure? This is really bad, guys. And it's going to be really hard for the federal government to find $218 million an hour in savings. To find $5.2 billion every day in savings. The news just keeps getting better, man. Anyway, that's what I got for today. I apologize again for all the negative stuff. It just seems like that's where the markets are right now. Hopefully someday soon we'll get to some positive. We'll have a big bull run rolling and we can talk about good and fun stuff. Sadly, since we started this show, it's just been all negative crap with inflation and bear markets and real estate tanking and friggin' retarded government. Anyway, I appreciate your guys' support. We will be back tomorrow to wrap up this crazy, wacky, nutty week. We'll get some data tomorrow. We'll see how that looks. We'll see how these markets react to it. We'll see if we get the Fed talking heads out en masse. I'm sure we will. But in the meantime, guys, if you can, hit the like button. Hit me up with your questions and comments. I'll be on there later on responding with you guys. Until tomorrow, take care. Thanks.